my name is Sarah Corley. I'm Deputy Director at DFI, and I'm responsible for running DFI's webinar and podcast series. So I'm really excited to be with you today on this really important webinar, which we're going to be talking about mobile money regulation and whether this has any impact on the use of mobile money. We're really lucky to be joined by three guests today, three experts from the GSMA. We've got Calvin, Kennedy and Mariana, and they're going to introduce themselves shortly after I begin. But they're going to explore with us some of the findings of the recent report they made and help us sort of process what is the link and what is the link between regulations, mobile money use, and particularly focusing on things such as gender, whether there's an impact on, or different types of people within the ecosystem. So, what changes and what impact that they can have. Just a couple of quick housekeeping things before we start. We've got three panelists on the line, so there needs to be lots and lots and lots of questions for them today. So if you have questions for them, please put that into the Q&A function. You'll find that in the little menu on the bottom of Zoom. And please don't use the chat because it's much easier for us to find your questions in the Q&A function. Also, just a little reminder that we are recording the session. So if you have any issues with internet or you really enjoy it and want to share it with your colleagues, over the next couple of days, you'll receive an email with the link to watch the session on YouTube as well. So thank you very much for joining us. I'm really excited to hear, and I'm going to hand directly over to Calvin, who's going to start the session. So Calvin, Kennedy, Mariana, thank you very much for joining us today, and over to you, Calvin.
Thank you very much, Sarah, for inviting us to this webinar, and thank you for those who are attending for your interest in the paper and study. I hope you're going to find it of interest. I'm going to just bear with me. Oh. Right. Can you see my slides, Sarah?
Absolutely, yeah.
Super. Thank you very much. So, yeah, the topic of the webinar today is we recently published a couple of papers actually looking at the impact of mobile money regulation on mobile money usage, and then a follow-up paper trying to understand if those impacts, to the extent that they exist, whether they have a disproportionate impact on mobile money adoption amongst women. So I'm just going to kick off and highlight the key, the background, motivation and findings of the study. My colleague Mariana will then take over with some of the implications of that, particularly from a gender perspective. And as Sarah said, we also have our colleague Kennedy, who, if you have some more specific and technical questions around mobile money regulation, he'll be here to answer those as well. So just by way of background, I suspect a lot of you are familiar with mobile money and how it's advanced, but the GSMA publishes an annual State of Industry report on mobile money trends, and at the end of March we published our 2021 version. So if you're interested in some of the latest numbers, you can look in the report, but I've highlighted some here. So by the end of 2020, there were 1.2 billion registered mobile money accounts. If I take you back to around 10 years ago in 2011, there were around 71 or 72 million. So there's been a massive increase over the last decade of more than tenfold. We see more than just over almost a third of those are active accounts that are used monthly. And we've also seen the amount of transactions and value increasing over time as well. Over $2 billion processed daily by the mobile money industry. And a lot of those payments are now not just on airtime top-ups or sort of peer-to-peer transfers, although they still account for a big proportion, but we're finding an increased amount used for international remittances, digital payments, government-to-person transfers, and other things as well. And we'll talk about this a little bit later, but obviously a lot of these trends were accelerated in the last year following the COVID-19 outbreak. So the key question we were trying to look at in this study is mobile money has obviously been very successful in closing some of the financial exclusion gap, especially in the middle income countries where access to traditional bank accounts or other financial services is more limited. So we wanted to understand in particular what the role or what the impact was of the regulatory framework. So our sort of framework starts from the fact that in terms of whether someone in a country uses mobile money, there's a lot of things that influence that. You know, on the demand side, on the consumer side, it will depend on their income and savings profile, whether they have access to sort of a traditional bank account, obviously whether they have a mobile phone, and other factors as well. On the supply side, obviously, mobile money can only exist if there's a mobile money provider with an adequate agent network. Depends on the extent of competition, price, and the service and product range as well. So mobile money regulation obviously impacts both of these. So the regulatory framework establishes who can provide mobile money, what services they can provide. In some cases, they can prescribe the more sort of specific regulations around transaction limits and know your customer rules and regulations. And equally on the demand side, the regulations set out the degree of consumer protections rules and how they apply. So that will obviously impact how much trust consumers have in the service. So we wanted to bring this sort of the different aspects of mobile money regulation together to understand their impacts. And the key, one of the main sources of this is the GSMA Mobile Money Regulatory Index, which I work on with the GSMA Mobile Money team, including Kennedy, who's in this session as well. So this has been running for, I think we launched the first version at the end of 2018, so it's just over 2 years now. And it's an index that benchmarks the different aspects of mobile money regulation across 90 countries where mobile money is available. So it has indicators around the authorization and things like capital requirements and who can provide mobile money. There are indicators around consumer protection, the extent of transaction limits, know your customer roles, agent networks, and then a sixth dimension, which is sort of a catch-all for all the other things around investment in infrastructure. So here we look at taxation, access to national settlement switches and infrastructure, payment infrastructure, as well as other things that were out, such as national financial inclusion policies. So we bring all these together into a regulatory index that enables countries to and policymakers to understand where they are in terms of the enabling environment for mobile money regulation, and also how they can compare to other countries as well. If either if you Google this or after this session, we can send a link. The index is publicly available. You can see there's a visual tool. You can download all of the index scores and the data, and there's a methodology document that explains in more detail how these indicators are constructed. Sadly, I won't go into that here because I could probably spend another 2-3 hours on that. And sorry, I'm just going to do this slide first because it probably makes more sense to do it this way. So in terms of the methodology to this study, so we carried out an econometric analysis using the 2017 World Bank Findex survey. We'd obviously like to use slightly more recent data, but due to the pandemic, this global survey wasn't updated last year. But still, we were able to include 46 countries covering 50,000 individuals. And the objective was to investigate the relationship between mobile money usage from the survey and the mobile money regulatory index. And I haven't included the technical details. For those of you who are interested in the empirical approach and specification, that is provided in more detail in the working paper, but just to provide a very brief summary of what we were trying to do. We know that if you just sort of do a one-to-one correlation between a country's regulatory index score and mobile money adoption, there's a positive correlation, which means that countries that have sort of more enabling regulatory environments also tend to be those with high levels of adoption. But we saw in the earlier slide that there's a lot of things that drive mobile money usage, such as an income level, whether a user has access to a bank account, whether they live in a rural or urban area, their income levels. So the idea behind this study is we try to control for as many of those factors as possible and then isolate the link between mobile money regulation and mobile money usage. And this is the top level findings. So having controlled for all of the factors that we could that drive mobile money usage and adoption, we were then able to isolate the more direct link between regulation and usage. And the analysis found that there was indeed a positive and what we call a statistically significant link between the index score, i.e. a country's mobile money regulatory environment, and mobile money usage. Specifically, if a country's index score increases by 10 points, then the likelihood of them using mobile money increases by 3.2 percentage points. The chart on the right, the main thing to take away from that is that the impact of regulation sort of it increases as you go further up the score. So a simple way of putting that is going from 50 to 60, so I'll just flip it around, going from a score from 80 to 90 has a bigger impact than going from 50 to 60. So it means that as you keep pushing the sort of more enabling regulatory factors, you will then find, you know, higher impacts as you keep going up in terms of its score. So those are the key, that's the sort of the top level finding. I'm now just going to hand over to Mariana to talk about some of the more detailed findings. Obviously the top level finding is encouraging, but what's obviously quite of, I think, particular interest in how we can leverage the index is to understand which specific aspects of regulation are more strongly linked to usage. As I said, we have a number of different indicators in the index that capture different aspects of regulation, so we can explore in a little bit more detail how which of those have perhaps stronger links and which ones have less strong links. So with that in mind, I will first of all make sure that my mouse is working. And yeah, Mariana, I'll hand over to you and carry on sharing.
Thank you, Calvin. Just as a small introduction, I'm happy to be here. My name is Mariana Lopez. I'm a senior advocacy manager for the Connect the Women program, and we work on different initiatives to drive women's digital and financial inclusion, which is why for us it's very important to understand what are the factors within a regulatory component that actually help to drive mobile money use among underserved groups of population, specifically women. So building on what Calvin was saying, when we embarked on this research, we decided to break down the reg index into the different indicators to identify those that have a significant and positive impact on the probability of using mobile money. And we found that there's a statistical relationship between mobile money use and the different aspects of regulation that you're seeing on screen. And so you have a list of the different indicators that we found are relevant, and these are several. So we go, for example, from eligibility, which is allowing non-banks to issue mobile money, to permitting international mobile money transfers, a comprehensive consumer protection framework, as well as things like agent authorization, which refers to giving mobile money providers the flexibility on the regulatory process when it comes to appointing the different agents. Affordability is also important, especially when it comes to the strict transaction limits and the price controls that a lot of the mobile money transactions can have. Settlement access, as well as interest payments, which in this case refers to allowing providers to distribute interest on the different accounts. And like Calvin said, there's a lot of things that we could go on regarding the specific indicators, but it's for the purpose of this research and for this presentation, it's perhaps better to just highlight these indicators as those that are statistically significant and leave it at that, and invite you, of course, to look at the index online, to look at your own country and to have a play with it, just to see where you're ranking on these specific ones and what can we learn from that. Another thing that is important to note is that each of the dimensions that we have on the reg index, which you saw on the previous slides, have a positive and significant relationship with mobile money use, with the exception of KYC. And this is really interesting. So it could mean very different things. It could suggest that KYC requirements are not an important factor when it comes to driving mobile money use. It could be that the reg index is not measuring this is a relevant component, but it could also be that KYC is more relevant for specific segments of the population. So with that in mind, let's go into the next part of the analysis, where we look at whether there's a positive association between mobile money use and the regulation for different groups of individuals, for example, women. So we found evidence that a more enabling regulatory framework has a stronger association with mobile money use among women compared to men. And this is quite significant. It means that when a country's index score increases by 10 points, the probability of women using mobile money increases between 3.5 and 4.5 percentage points. This probability is statistically significant and is also greater than that for men. And also important to know that when it comes to income, we found that there is some evidence that suggests that a higher index score actually benefits the poorest 40% of the population. So again, just to say one more time, the probability of women using mobile money increases in a statistically significant way that is greater than that for men. So there is an important distinction when it comes to regulation. And can we move to the next slide, please? Thank you. So given these results that suggest that mobile money relationship has a stronger link with the usage among women and among the poor segments of the population, we also wanted to understand if there were some indicators that were related to this connection. And when we looked at them, we found that some of them have a particularly strong association with the probability of using mobile money among women. And these are the ones that you're seeing on your screen. So for example, regulations that permit agents to register customers and to carry out different activities, also less strict KYC requirements. And in this case, for example, when users can access entry-level mobile money accounts with just an ID as opposed to having more elaborate documents, or where other documents are allowed to register for an account, as well as more flexibility when it comes to agent eligibility and agent activities. So again, when we have regulation that is more enabling for agents to register consumers and to carry out other activities beyond cash in and cash out, that those indicators appear to have an important and significant link when it comes to women's use of mobile money. Important to note that all of the 3 indicators, except for eligibility, we did not have a significant association with mobile money use in general. So these indicators are only relevant for women's use of mobile money. And again, that is something to keep in mind, because it means that certain mobile money regulation are actually more important to drive use among certain segments of the population. And also worth noting that in terms of income, there are also some indicators that are more strongly linked to mobile money use. And these are also related to transaction limits, agents' activities, and the permitted IDs that you're allowed to use to register for an account. I do invite you to look in and go and read the paper to get more information on the specific indicators. But the important thing to remember is that they do matter, and that even though there are different components when it comes to a regulatory framework, some are more relevant than others when it comes to driving use among, again, different groups of individuals. And we can move to the next slide. So these results have very important implications. First is that when we see an enabling mobile money regulation, when we think about enabling mobile money regulation, we really need to think about underserved groups. And the fact that these results do suggest that there are some important indicators, even though this may not be the most conclusive evidence, it does suggest important evidence of the things that we need to focus on to drive usage. In fact, many of the regulatory response adopted by different governments to support mobile money use during this COVID-19 pandemic are in line with the regulatory components that appear to have a significant positive impact on the use of mobile money. So for example, relaxing transactions and balance limits and having more flexible KYC requirements. So again, this is something that we're already seeing happening as a response to the pandemic. And the fact that the data supports that these are important considerations to take into account when wanting to drive use of mobile money is something that is not only encouraging, it suggests that we should continue to think more about the specific components and how to make them not only a solution, but a permanent one in terms of wanting to continue to drive uptake. And this research indicates that there is a lot of potential to strengthen, again, this and other components. And just to highlight that an enabling regulatory environment is essential for mobile money operators to launch and to scale different services. We know that underserved groups of the population, for example, women or those that are facing more challenges in terms of income, have different needs, have different circumstances, have different capabilities, have different preferences. And if we don't build an ecosystem that allows for different innovative solutions to reach them, we're never going to close the financial inclusion gap. So in conclusion, this study does contribute to show the value of research to inform policies and different strategies, again, to close the financial inclusion gap, including that affects women, and to drive resilience and ultimately socioeconomic growth that we need for our economies to recover after this global crisis. So I'm going to make a pause there and maybe ask Calvin if you want to add anything else.
Thanks very much, Mariana. No, I think that sort of, as you say, that covers all of the key findings. As you said, I think what was quite interesting is we did this research last year. The first version of the paper was done in the second half of the year, and then when we got the results, and then separately, what we've also been doing, and this is something that's been led by Kennedy and his team, the GSMA has been tracking what policymakers and governments and central banks are doing in terms of regulatory responses across all countries where mobile money is in place. So we've been looking at, where they've been making changes, either temporary or permanent, on things like KYC requirements, transaction limits, price controls, and other things. And yeah, for us, it was quite interesting and quite encouraging that a lot of the things we saw were in line with the sort of things that we were capturing in this index and that we were finding were important in terms of mobile money usage. Yeah, I think it all sort of came together quite well. I think just to touch on what Mariana said, obviously we see this as the sort of the first step in the research. I think that the mobile money regulatory index is, to our knowledge, the only sort of publicly available tool that benchmarks regulation in that way. It was based on analysis of one point in time due to the survey. Going forward, particularly when Findex or using other country national surveys, being able to track regulation and usage changes over time, I think will be an important extension of this work. That will also allow us, I think, to be a bit more inclusive on causality. Obviously, what we've done here is establish a strong relationship. Obviously, the relationship can work both ways. Obviously, regulation can have an impact on usage, but as usage increases, that can obviously drive governments to change their regulations as well. So I think the link is important, but it will be good to sort of try and isolate the causal impact in a more robust manner. That hasn't been possible, mostly just due to we haven't quite had the data available yet. But in hopefully going forward, that's something that we will be able to do. So this is very much the first step in this research topic, which is why I think as part of this the discussion we have here and more widely is really helpful to try and inform that and improve not just the evidence base, but also try and produce something that is actionable for policymakers, so that, as Mariana says, we can policymakers can accelerate the reduction in the financial exclusion gap. So yeah, I will stop there, and yeah, I'll hand back to you, Sarah. Or I should just say, the full report is available along with Connected Women newsletter. As I say, the mobile money regulatory index as well. If you have any problems accessing, then let us know. I'll post some links in the chat room shortly. But yeah, back to you, Sarah.
Perfect. And we'll share all the links that you share with in an email that everyone on the line and anyone registered will receive as well. But thank you very much for that presentation. It kind of struck me how, like, if you hadn't have sort of dug into that data a little bit more to look specifically at factors such as gender and income, we would have actually missed quite a few important factors that maybe would have got lost when looking at the data as a whole. What kind of drove those decisions, and were you surprised that there were those differences? Mariana, shall I start with you with that question?
Sorry. Sure. So I think for us, again, it was very important to try and understand what are the differences that affect different groups of the population. And we know from our work on the field, from different insights that we've done, from the cooperation that we've done with operators, that women face different challenges and that this can be greater than those that men face in many instances due to norms. So when trying to understand the different components of regulation, for us, it was an essential question to attempt to answer. We were prepared to face a result that says, no, there is no difference. In reality, then these are the aspects of regulation that help drive mobile money use, and that is the case for anybody, which could be a situation. But we're pleasantly surprised to find out that there were these very specific indicators that did seem to be more important to drive women's use. And some of them resonate again with the things that we've seen on the ground. For example, KYC requirements. The fact that a lot of women around the world lack access to proper identity documents and that this could prevent them from registering and aligns with what we are seeing reflected in this data. Calvin, do you want to add on that?
No, I think those are good points. No, it's a very good question, Sarah. I mean, yeah, I think to us, I think the key, the valuable insight here is to dig into that level of detail. I mean, we work on a couple of other indices on digital inclusion and others, and they're quite powerful from a communication and advocacy tool. When you combine everything into a single number, it's easier to present and people can compare and contrast. But on our side, that's one aspect. But the really interesting side is going into detail. When we engage with policymakers on this, the index score, it's the starting point. But obviously, what we want to engage on and what they're interested in is to say, right, mobile money regulation is multidimensional. So what particular aspects are we looking at here? So yeah, looking at those in detail is something that we wanted to do. As Mariana said, we also, we know that the degree of mobile money usage and adoption does differ depending on different population segments. So where the data are allowed, we did want to explore that. We didn't have any priors, as it were. There's equally plausible reasons why regulation might sort of disproportionately impact men or higher income users, given that they often tend to be the more predominant users of mobile money. So no, we didn't have any priors, but the fact that the findings came like this was quite interesting. Also, I think in some cases, particularly as Mariana said on the gender side, they were, I guess, somewhat intuitive. So on things like KYC, in terms of easing access to mobile money, it sort of makes sense that would more directly impact usage amongst women. Say being able to access the payment switch in the country. And similarly, when we were looking at low-income users, trying to ensure that mobile money was affordable, with not too. As I think actually there's a question that we can address later. But for example, not imposing specific mobile money transaction taxes that don't apply to anything else is something that impacts usage amongst low-income users, which again feels more intuitive than others that are more general.
And actually, that sort of the mobile money taxation was one of the questions that had come in from the so Irene has sort of asked that question, and sort of several governments have debated, have backtracked, have gone ahead and done it. I mean, did you assess that at all, and what are the impacts?
Yeah, so I'll touch a little bit on this, and then actually, I'll actually hand over to Kennedy, who's done a bit more work on this. So the index does include an indicator around whether taxation, obviously all providers of mobile money are taxed more widely, but what we're looking at here is a specific mobile money tax that doesn't apply on other services. So the fact that governments are specifically targeting mobile money transactions, which obviously impacts both the incentive on the provider side, but also affordability. So obviously the extent to which that tax is applied differs. So, the indicator obviously simplifies a little bit. But yeah, we did find that when we sort of isolated that, we found that where those taxes are in place, holding all else equal, it's more likely to reduce adoption. A lot of the countries that have imposed these tend to be the ones where mobile money is scaled quite significantly, for example, in Kenya, Tanzania and Cote d'Ivoire. But that was, for us, that was an interesting finding. Kennedy, I'm just going to let you touch on that issue as well, if that's okay, because I know you've done a lot of work on this. And then I think, Irene, you also had a very good question around other factors to eliminate to improve regulation.
Yes, so thank you, Calvin. On the issue of taxation, I think you've captured it quite well. The biggest problem that taxation has actually impacted on mobile money is the fact that there seems to be a level of misunderstanding as to how mobile operators actually make money out of mobile money transactions itself. And one of the biggest challenges we've seen in some countries is the tax is actually being imposed on the actual transaction amount that a customer is actually sending, and which ultimately means that the customer loses money in the process of sending money. And of course, now this also now has a ripple effect of the customer shying away from using mobile money and then going back to other informal ways of sending cash and all that. So, but by and large, I think the conversation now is beginning to take root around whether it's the right time to really tax mobile money, and if it is being taxed, is it really being done in the right way, and is this being applied equitably across the financial sector? And if I could just mention one of the things that we've also mentioned, seen particularly within the sub-Saharan African region, is that some taxes tend to be applied only to mobile money and not applied to other payment service providers such as banks and all that. And what that would mean is that there would be a disproportionate view to how people want to use financial services. People might tend to want to use other forms of financial services which are not really available. And then it tells you that basically there's more that can be done to basically make sure that the sector is remains to be sustainable. But I'd like to mention something very critical that we've also been able to note. Mobile money, beyond just financial inclusion, has been able to unearth so many other informal transactions within the economy. And we are seeing better monetary and financial stability measures by central banks because of mobile money. And so when it comes to a policy perspective, it's very important to weigh how policies work both for the government and when they're not really working for the government. Because if we were to tackle issues such as AML, CFT, you would want to have more transactions coming into the formal economy to be able to track, try and trace some of these transactions. But if you impose taxation and people avoid using mobile money, then again, you run away from the issue of trying to monitor AML, CFT, which could have been better handled if these transactions were actually online. So it's a broader discussion, but we hope that in the coming days, governments will try to be more understanding when it comes to applying this. But the good thing is now the conversation is happening and there's more understanding around this. Finally, there's the issue of impact. There's a study that we conducted as a GSMA on the impact of taxation and the costs of taxation, especially within the region. One of the things that came out was governments seem not to understand how taxation will impact usage eventually. And this came out as a policy gap for the teams that actually come up with the taxes. And I think there's need for better modeling for such behavioral impacts that could be brought about by such issues as taxation. It's one of the papers that we have done. I believe we should be able to share that with you as well, after this session.
That would be great, as I know the taxation issue has come up a lot in various groups and in our forum. So it would be great to be able to share that paper with people. Kennedy, thank you. Calvin, did you want to tackle Irene's second question next? So, her question is, if we, sort of take away eliminating other factors that are shifting usage apart from regulation, and how did you kind of address that in your methodology for the study?
No, that's a very good question. Yeah, so obviously, as we flagged, the things that drive mobile money, usage are obviously they're multidimensional. So obviously, capturing all of those factors, especially in an index, would be quite a significant task. So the index is specifically scoped to focus on regulation. In terms of the other factors, so I mean, actually in the paper we do. For the other things that what we control for, so things like someone's income level, whether they have access to another bank account, whether they're in a phone, whether they live in a rural urban area or their income. That's all there. And the results, I guess, aren't too surprising. I guess at least that means they're somewhat intuitive, but higher levels of education are associated with more mobile money usage, those with higher incomes, and consistent with what Mariana's been saying, even once you control for other factors, women are also less likely to use mobile money. So some of those are there. Obviously, there's certain factors around that we know probably impact mobile money usage, but are quite difficult to measure. One thing that I guess comes to mind is the sort of level of trust in a service. So, a lot of qualitative research around, people who are reluctant to use mobile money is just, they have traditionally used cash, and there's just a reluctance to hand that over. Even though the financial regulations are in place, there's just, there's a reluctance, having always used cash for a while. So, aspects around those and skills and financial literacy are important. Yeah, I think the challenge there is, one, incorporating them in this framework probably just requires data that currently isn't available, but that they're absolutely important from a policy perspective. And yeah, the study hasn't quite gone into that yet, but that's absolutely an area that I think needs to be explored further.
And Salvador's question is kind of linked to that, asking, is data privacy concerns one of the relevant factors for people, using mobile money or not? I mean, I guess that's kind of sort of also connected a little bit there to the trust that you just raised. Did you look into that, or have you got a view on that?
Yeah, so we do. We have a dimension around consumer protection, and this includes a number of indicators, around safeguarding of funds, but it also looks at whether the regulations, either mobile money specific or general consumer protection, have rules that apply a number of different things. So, for example, are there rules that require, clear price disclosures, and recourse to dispute resolution? And one of those is, one of the indicators we look at is whether the consumer protection rules provide for the protection of mobile money customers' data. So that is something that's captured in the index. I guess one thing to be aware of is, and maybe it's a limitation, but the way in which we assess this is we assess it based on the rules, on the regulations that are written. So we have, well, I say we, this is Kennedy and his team that really do all the hard work here. They review, 90 countries' regulations in detail, using our sort of assessment criteria, then score based on it. So that, I think, takes you some way there. Obviously, there's a question as to how rigorously or to the extent that's enforced. So, for example, to provide, one, I won't necessarily name the country, but one of our indicators is around, whether non-banks can provide mobile money. And when I was presenting in a country, and, there's certain aspects of the index where they scored quite well, non-banks can provide mobile money. But then in the workshop, they said, well, yeah, that's what the regulations say, but in practice, they're not licensing anyone. So, there's that, there is that issue. And I think, what the index can provide there is, when you're sort of looking at a specific country, you can look at this, use the index as a starting point, but then get further into the detail in terms of what happens in practice. I'm just going to ask Kennedy because I think you'll be closer to some of this than me. I don't know if you have anything to add on the data protection issue, and whether that's come up in a lot of your work.
Yeah, so I think the level of assurance that mobile money operators give when it comes to data protection is quite good, and over and beyond just being able to comply with the data protection laws, most of these operators actually have implemented safeguards within their organizations just to make sure that consumer data is protected. And I think now actually the biggest issue now when it comes to the issue of data protection is as to how the regulations would actually be more lenient to promote innovation. So when it comes to either how it impacts how customers use mobile money or not, and whether their data is safe, I think that there's no question regarding that, basically. But the biggest issue now is we've seen some countries that tend to have stringent data protection laws tend to inhibit how innovations around particularly KYC could be implemented. And if I could mention something like biometrics, for instance, if the data protection laws are not quite at par. There's a chance they could impact KYC, which as has been demonstrated is very critical for women and women involvement in financial inclusion. So there's need to just try and strike a balance to ensure that regulations promote innovation. But that's something important that I also like to tie into that is that in some communities we've realized that, as Mariana mentioned, that women don't have IDs, and maybe for cultural reasons it's the husband or somebody who's a male counterpart in the family who actually holds the ID. Yet this lady or this particular woman would want to access financial services. The only option for such a person would perhaps to use biometrics to be able to be identified. And so it's important to drill down into such dynamics to be able to say, what can we do to ensure that this cultural thing is no longer an impediment. I'll also mention some communities where for KYC, what is supposed to be done is facial recognition. But culturally, when you go to a mobile money outlet, it's a man who's particularly an agent, and culturally, a man may not be allowed to, facially recognize a woman. And how does this tie into that woman not being able to access financial services? So it goes back to biometrics. Am I able to use something to scan the iris or whatever? So data protection laws need to be put in a way that will be able to promote such innovations to ensure that people are not really locked out. So I think that to me would be the best response also to that question.
Thanks, Kennedy. I mean, I think it's really interesting how you can't just take one thing on its own. Everything kind of, it links into a much bigger picture, isn't it? I mean, even like you say, the culture of the country and the fact that, in many places, a lot of agents are still men, all of those things almost make up a chain of, of reactions that happen and affect how much mobile money is used or not. So thank you for putting it in that wider context. I think it was really useful to see everything fitting together. We've got a question here from one of the attendees who use your regulatory index in your work. So yes, at least one person on the call definitely knows it exists and uses it, which is great. However, they are sort of saying that, is there a plan to update it? Because, perhaps it needs a little update. In specific, they give the example of the tiered KYC indicator being perhaps needing to be tightened up a bit. Do you guys have any plans to update that?
So no, both very good questions. So in terms of the broader update, so yeah, we first did this end of 2018, and thus far it's been an annual update. As obviously, more frequent updates would be good, as mentioned, because of the way in which this needs to be done, because it requires a review of all regulations. As you can imagine, that's that's quite a challenging task. We're looking at ways to speed that up through other means. Although having said that, a lot of we're assessing regulatory frameworks, and but as of before last March, I would say a lot of those they're not things that sort of change monthly or even yearly. They'll sort of countries will sort of update them. Some of them won't update them for years, or they may just update certain aspects of the regulation rather than everything wholesale. So that wasn't at first probably necessary. Obviously in the last year there have been updates. So in the version we just published, we focused on those countries where we knew there had been some changes. So yeah, that's the way in which we tend to do the updates. In terms of the indicators, yeah, absolutely. As I mentioned, because we're having to base this on review of regulatory texts, and obviously the idea of benchmarking, what's an enabling regulation is, it's quite difficult. So we're always, looking at ways to improve that. And we made a number of changes from following the first index, and it's certainly something we'll consider. I think KYC is a very good example. The way in which different KYC rules are formulated, they can be quite complicated, and the nuances can differ significantly by country. And it's not always possible to capture all of that, though we would like to do that as much as possible. So as you say, at the moment, we have these different tiers in terms of, and I think Mariana highlighted them, whether the KYC goes beyond, a sort of verification of, identification and a mobile number, if it needs more stringent requirements. And then, sort of at the other end where providers have a little bit more flexibility subject to some regulation. But that's absolutely something I think we certainly welcome feedback on. So yeah, if you either in this or if you want to reach out to us, if you've got any ideas based on either your own research or work in this area, please do reach out, because we're certainly always willing to consider other options there.
Brilliant, thanks so much for that, Calvin. And I want to touch on another thing that you raised in the presentation is COVID. So obviously, you know, COVID has had very negative impacts, but for digital finance potentially and things like mobile money, there has been a potential upside to increasing the usage of. And so, you know, we discussed how, you know, a lot of the regulations have changed. So often, you know, it may take years for things to move, but actually due to COVID, that has actually sped up the changing it. And do you guys have a view of, do you think those changes will stay? You know, have we had the time to prove to the regulators that actually these, you know, being more innovative, being, you know, more flexible has actually had a positive impact and very few risks? What are your thoughts on that?
Perhaps Calvin, I could take that one.
Yeah, no, I was going to say, I'll defer to you, Kennedy.
We need the regulation expert for this
one.
Yeah,
no, you're definitely closer to the policy one.
No,
yeah.
I don't envy your job there, Kennedy. I can't imagine what it was like reading all of those regulations. So definitely an expert.
Yeah, well, so that's a very good question and quite timely as well. And I really like the fact that we were able to showcase the COVID-19 measures that were put in place last year. And to answer the question, that is yes, I think these measures will actually eventually be, you know, fully adopted by governments. One of the things I would like to single out is the issue of transaction limits. For instance, for the longest time, transaction limits were limited because regulators had concerns around AML, CFT, how secure were mobile money systems and all that. But by opening up and increasing the transaction limits last year, another angle was actually observed where the SME sector was now able to actively participate in mobile money, which again opened up, you know, a whole other sector of e-commerce within the region and all that. And it goes to show that the industry has actually been able to demonstrate that by being able to make the regulations more flexible, there's more positive impact on usage, and there's minimum risk. And just to be able to understand how regulators think, you know, a regulator's first concern, and the central bank for this matter, would always be financial stability and monetary stability. So if there's no concern around there, then they will always definitely try to, you know, untighten the laws of it to be able to allow more people to be able to, you know, use the mobile money for this case. KYC in particular is something that we've also been really monitoring closely, because it's all about allowing people to start using mobile money at the first instant. An interesting trend that we're now seeing is the issue of remote customer onboarding, because when COVID-19 happened, agent outlets were closed. A customer wouldn't be able to show up at an agent, you know, to be able to open a mobile money wallet. So what a number of governments did was to allow mobile operators to be able to use SIM card information to remotely onboard, you know, mobile money customers and all that. This has happened seamlessly, thankfully now over for 1 year in some countries, and there's a trend towards making that permanent. So there's a ray of hope and that this will actually stay in, but there's a caveat. When we look at some of the measures, such as the measures that were put on fees and trying to, you know, put fee waivers and all that, these may have had an initial negative impact to the industry. And it's one of the areas where we actually call for more dialogue, because at the end of the day, mobile operators need to be able to make money to be sustainable. And so on this particular one, I think there's need to be able to ensure that mobile money will still be there 10 years out, you know, down the line, and, you know, just being able to consider how to best approach the issue of, you know, fee waivers. Yeah, so I hope I've been able to answer the question.
That's great. Thanks so much, Kennedy. And it kind of one of my next questions, which kind of pulls together a few of the threads from the conversations in the Q&A. But, you know, when we think about M&Os, you know, they're being taxed, you know, and banks maybe not even at a transaction level for the customer usage, which could put them off. during COVID as well, banks weren't told about their transaction fees, but MNOs and mobile money providers were. What is it that, what is the dynamic between the regulator and mobile money providers? Is it positive? And what can be done to kind of change that? Because as you say quite rightly, the regulators have to be thinking about risk. And we've got a question from Nash saying, he noticed in Kenya there was a spike in fraud. So, obviously there's got to be a regulator in place, keeping things safe for the individual and for the country. But we also have the private sector who need to be able to provide, and make some sort of money, not necessarily, millions of dollars, but actually, enough to keep running the service. And then we've also got the end user who needs to be able to afford the service. How can that kind of different stakeholders and, that kind of engagement and collaboration work?
So I think the issue of collaboration, picking just from the last word you've used, is very important because again, when you look at governments, we do understand that they're also they're facing tough economic times, and they need to make an extra buck to be able to sustain an economy. And usually it's very easy to try and look at whatever sector is trying to making a bit of money to tax it. However, there's a lot of education that needs to go into place to policymakers to understand how exactly mobile money works and how the government can benefit from mobile money, at the same time trying to drive financial inclusion. And so I'd look at some of the benefits of government to pass on payments, which have been facilitated by mobile money. One of the things that happened during the COVID-19 period is that many people lost their jobs, and people needed safety nets to be able to sustain a living and all that. And we had, donor agencies and philanthropists trying to, give a bit of money to people who needed it. And mobile money again became the only source or the only means to be able to send this money to the people who are mostly in remote areas and women in this particular who actually needed an extra coin. So there's need to be able to balance and see how can we sustain mobile money to help the government while at the same time, we continue to sustain financial inclusion. So far, I think the relationship between governments and mobile money operators is quite cordial, especially in the more mature markets, because the benefits of financial inclusion are all over the place. We can see that. But we urge, for more dialogue on especially around issues such as taxation. There's no need for coming up with a policy before undertaking enough stakeholder engagement and being able to just take all the views of everybody on board. To mention the issue of, I think the question also touched on something on fraud. I think given that many transactions became digital during this time, and we have one of the things that the COVID-19 pandemic has brought is increased digitization of payments and in every other sector. I think that the mobile money sector really did quite a good job in just trying to ensure that customers are well informed about the threats, and in terms of also just putting necessary system checks to ensure that cybercrime, for instance, is managed. But of course, this calls for support again from the government when it comes to issues such as customer education and empowering the population not to be to be privy to some of these activities. So again, collaboration becomes the key word here. I hope that answers the question.
Mariana?
I think that the points that Kennedy just made are excellent, and I just wanted to build on that and say that what we were saying is a lack of understanding of the potential of mobile money to become a tool towards economic empowerment and economic growth, resilience at the individual level, but also at the national level. And the fact that mobile money is more than just a way to make payments, that it's becoming part of the ecosystem to send remittances, to start a business, to get credit, to pay utilities, to pay your taxes, to get government transfers, is becoming one of the central drivers of the digital economy. And without that view, we will, if we don't understand the service as such, then regulation will continue to become limiting. And that is the vision that both the industry and policymakers should share. The fact that it's in everybody's benefit for mobile money to continue to grow and to drive financial inclusion.
And I guess it just comes back to that concept of the, we've talked about it on many of our webinars, is the use case. Like mobile money can't be successful if it's only just, going to be to send, peer-to-peer money and cash out. Actually, as you talked about, the remittances, paying businesses, G2P payments, the more different use cases you get, the more it can kind of embed within the ecosystem and continue to play its role to generate money for for the MNO itself, so that they can continue to provide it, as Kennedy, as you said quite rightly, that you don't want it to suddenly be pulled from the system. They need to be able to generate it. And yeah, it seems to me that the more use cases we have, the more people that would then want to use mobile money, and then the whole thing becomes like a self-feeding loop, as long as we have the regulation in place that allows those use cases to happen, to be there. And any comments on that before we close the webinar?
Yes, I like how you summarized the last point, and I think again, looking at the socioeconomic benefits of mobile money is something that sometimes we tend to forget. So beyond financial inclusion, mobile money has all these other positive ripple effects in the economy that we need to also factor in. I'd single out something like employment. And employment is a big challenge in most mobile money markets. And when you look at agent outlets, for instance, so many of these agents now are in formal employment because of mobile money. So it really is a broader discussion to be able to, like Mariana says, to be able to broadly see the benefit of mobile money. But the good news about this is that mobile money is here to stay. We are happy to see that financial services are increasingly becoming digitized. I don't think this will now backtrack again, and the only direction is digital, and mobile money still has a very critical role to play in a post-COVID world.
And that's a great way to put it. The only direction is digital. That's the way forward. It's very, very clear. And the question now is, how do we bring on board all those people that are still behind? How do we make sure that everyone has the same chance to participate meaningfully in the digital economy?
I think that's a good summary. And actually, there was one other question there that I think actually this touches on, which is obviously we discussed the different drivers of mobile money, but obviously there are a number of users who don't even have that option because they don't have access to a mobile phone. And I think there was a question there that made a very good point that obviously in the absence, at least mobile money can be used on sort of a traditional 2G platform and doesn't need, the latest 4G, 5G technology. But, as part of the work that we're involved in and that Mariana does as well, we know that there's also a digital inclusion gap in a lot of countries. So, some of the barriers there around, accessing affordable handsets, improving the digital skills needed to access that's going to become an important part of that as well. And I guess, I guess the whole point is and there we find, gaps in terms of rural urban divides and gender gap and a significant gender gap too. So those things, I guess, need to be considered and targeted, sort of collectively and not in isolation. Obviously easier said than done. But.
I love where this conversation, that has flowed. It's kind of made me think that sometimes we always think about mobile money as being a financial inclusion tool only, or, sort of, we don't actually see the bigger role it plays within the financial ecosystem and within, the country's economy. And quite rightly, yes, we still have some way to go for getting everybody to that place of digital inclusion and to be comfortable using digital finance in whatever means they choose. But I think it's about time that we stop kind of thinking of mobile money as just being just playing in that financial inclusion field, and actually see how if regulations are innovative and flexible, there are lots of use cases. Actually, mobile money can be incredibly significant for countries, for individuals, and for businesses. I've loved this last hour. I love the fact that you didn't do a long presentation and we've had lots of time to chat and discuss and answer as many as the audience's questions as possible. I can't believe the hour has gone already, but it has, so we do need to wrap up. But I just want to say thank you so much, Calvin, Mariana, and Kennedy. It's been an absolute pleasure to have you on the webinar today. Thank you everyone who joined us today. And I'm hoping...
Sarah, I was just going to say, I hope we've been able to answer the questions, but for those, if you'd like to know more, the paper that we provided a link to does have my email address. So please, and Sarah, if you're doing anything, feel free to reach out to me on email, and myself, Kennedy and Mariana are happy to take further conversations over email or through another call.
We can include your email addresses as well in the mail that we're going to send out with the link.
That's fine by me.
Yeah. So everyone can get in contact with you to discuss, because I'm sure, like, this is just, we just started the conversation. There's many more conversations to happen, but I've really appreciated all of you very much for your inputs today.
Thank you.
Thank you.
Thank you so much, everybody, and we hope to see you on a webinar again soon. Bye, everyone.